Hello, welcome to my YouTube channel. In today's video, I'm going to be talking about accounting cycle. Accounting cycle involves a process of recording the daily accounting transactions up to the level of reporting the financial statement. The first steps involve the identification and recording of a transaction. That means a transaction is already given. It will be necessary for an accountant to identify the various types of accounts. That is it an asset account, a liability account, a revenue account, an expense account, or a capital account? Then the second step involves the classification of transactions. Once a transaction has been, once an account has been identified in the transaction, the next step will be to classify. When classifying this transaction is to know which account is going to be debited and which account is going to be credited. The next step involves posting those transactions into the ledger. There are three types of ledger accounts. You have the sales ledger account, the purchase ledger account, and the general ledger account. The sales ledger account is made up of the accounts of the debtors. Then the purchase ledger account is made up of the accounts of the creditors. And the general ledger account is made up of the accounts of the nominal accounts and the real account. Yes, after posting into the ledger account, the next step will be preparing a trial balance. A trial balance is a table which shows the summary of all the ledger account balances. A trial balance is used to see if the double entry principle was actually respected. That's the arithmetical accuracy of the double entry principle. Errors can be committed that those errors will not affect the trial balance and it will not be noticed. There are some errors that will affect the trial balance. There are some that will not affect the trial balance. After preparing a trial balance, the next step will be adjusting the entries. There are some transactions that can only be identified at the end of the year, like you have depreciation, impairment, you have prepayments, accruals, and so on. The last but not the least is the preparation of the financial statement. There are, of course, three financial statements to be prepared. You have the statement of comprehensive income, which is also known as the income statement, the statement of financial position, which is also known as the balance sheet, and the statement of cash flow. Then there is also need to close some certain types of accounts, like the nominal account. Remember, the balances of the nominal account will not be carried forward to the next period. So there will be a great need to close the nominal accounts at that level. There is a great need to follow accounting cycle. That is the importance in following the accounting cycle. The first importance is to prepare and report the financial statements accurately. The enterprise needs to prepare their financial statements accurately in such a way that they will be able to report them without making mistakes. They need to follow these steps in such a way that they should not overstate profit or understate profit. The next importance is to ensure that financial statements are prepared and reported in line with accounting conventions, accounting concepts, and accounting principles. Then the next importance is for better decision making in the establishment, in the enterprise. The managers will see the results, the financial situation. They will be able to make better decisions. They will be able to set strategies on how to improve in their operations. The last but not the least is to be able to manage their financial situation. They'll be able to manage their finances. Okay, let's take a practical example. We have payment of salaries by cash. To use this transaction following the accounting cycle, the first step is to record the transaction. We identify the accounts involved, that is the cash account and the salaries account. Then the next step is to classify which account will be debited and which will be credited, which means we have to debit the salaries account and we credit the cash account. That is recording in the general ledger. Then the next step now will be preparing a trial balance, and we have cash account and we have salaries account, which the debit will be equal to the credit. Then the next one will be preparing the financial statement, which of course is made up of the income statement and the balance sheet. The income statement, the salaries account will be found in the income statement, while the cash will be found in the balance sheet.